Yes, a very good morning to all of you. Right, so yesterday we completed with our discussion regarding the 21 clauses of the CARO 2020. Right, each of the clause of CARO, what we need to study over there, that what are the reporting requirements and then what are the audit procedures which are required to be performed by the auditor. And what did we say? Please inform the landlord and the landlady regarding the deposits, records, the dues, the undisclosed income, the repayments and the issue proceeds. Why? Because the fraud was done by Nidhi, who was a related party. Internal auditor found out that she entered into a non-cash transaction without registration with the RBI. Company has incurred the cash losses. Then there is resignation of the statutory auditors. There is material uncertainty regarding the ability to meet the liabilities. And then there is the corporate social responsibility and the consolidated financial statements. Right. Under clause 3, what was clause 3? Loans, investments, guarantee, security. You have to give the details of the transaction. Right. The aggregate amount and the balance outstanding at the end of the year of the loans, guarantee, security to subsidiary, associate, joint venture other than subsidiary, associate and joint venture. Then whether the loans, investments, guarantee, securities, what does it say? Whether the terms and conditions thereof are not prejudicial to the company's interest. Then whether the repayment schedule of the principal interest has it been stipulated and whether the repayment and receipts are they regular. If it is overdue, then state the amount which is overdue for more than 90 days and whether reasonable steps have been taken for the recovery of the principal and the interest. Okay, right. Then whether the company has granted any new loans, right, any fresh loans, extended the loans or renewed any loans to settle the overdue of the existing overdue loans, right, to settle the overdue of the existing loans. Then what is the amount of such loan and the percentage to the total loans. And then what was the F over there? Whether any loans have been granted which are repayable on demand or without specifying the period of interest, period of repayment or so. Again, the amount, the percentage to the total loan and the amount of such loans which have been given to the promoters and the related parties. Okay, so that was regarding clause 3. Then we came to clause 4. What was clause 4? Whether loans, investments, guarantee, security, are they in compliance with section 185 and 186 of the Companies Act 2013? Right, so you need to check the rate of interest, then the board resolution 100%, 60%, then the special resolution in the general meeting. The investment should not be through more than 2 layers of investment company and so. Right, then coming to clause 5, which was regarding the deposits from the public. What does it say? If the company has accepted deposits or amounts which are deemed to be deposits, then what does it say? In that case, whether it has complied with the RBI directives, the section 73 to section 76 of the Companies Act and any rules made there under. Right, and it says if not complied, then state the nature of the contravention and any order passed by NCLT, CLB, RBI, court, tribunal, at least whether that order has been complied with or not. Okay, right. Then we had the clause 6, which was regarding the cost records, where maintenance of cost records has been prescribed by the central government under section 148 1, whether such cost records have been made and maintained. Okay, then clause 7, a very important one, which was regarding the statutory dues, and 7A and 7B. 7A, undisputed statutory dues. 7B, disputed statutory dues. For undisputed statutory dues, you need to report about two things. One, the regularity of depositing the undisputed statutory dues. And second, those undisputed statutory dues which are outstanding as on the date of the balance sheet for a period of more than 6 months from the date they became payable, right? So that means all statutory dues which are outstanding on or before 30th of September of that financial year. Right, and for disputed statutory dues, two reportings. What are the two reportings? The amount involved and the forum where the dispute is pending. And a mere representation to the department does not constitute a dispute. Right, when we have to write a case study for this particular statutory dues, which start with SA 250, that compliance with laws and regulations is the responsibility of the management. Auditor's objective is to obtain the reasonable assurance. If auditor identifies a non-compliance, he will modify his opinion in accordance with SA 705. And then after that, section 128 says that a company will maintain proper books of account if they are kept under the double entry system of accounting and the accrual basis of accounting. Section 43B of Income Tax Act says that certain deductions are allowed only on the actual payment basis. And then you come to the clause 7A or the 7B of CARO 2020. Is it clear to everyone? Clause 7 of CARO 2020. Then we came to clause 8, which was regarding the undisclosed income, NUP. You remember that? Transactions which are not recorded in the books of account have now been surrendered or disclosed as income during the tax assessments under the income tax law, whether the previously unrecorded income has it now been properly recorded in the books of account. Right, so that was clause 8. Then clause 9, which was regarding the repayment of the loans or the other borrowings, whether the company has defaulted in the repayment of loans or the interest thereon to any lender. Right, then what does it say? The period and amount of default is to be reported as under. If the default is in the repayment to bank, financial institutions and the government, then the lender wise details are also required to be provided. Right, then whether the company has been declared to be a willful defaulter by any bank, financial institution or any other lender. Right, then what do we say? Whether term loans, have they been applied for the purpose for which they have been obtained? If not, then the amount which has been diverted and the purpose for which it has been diverted is to be reported. Right, then 9D, whether funds raised on the short term basis, have they been used for the long term purposes? If yes, again specify the amount. Right, then 9E, whether the company has raised any funds, right, whether the company has taken any funds. Why? To meet the obligation of the subsidiary associate joint venture. And 9F is whether the company has raised any loans on the pledge of securities of the subsidiary associate and the joint venture. Then what is the amount of such loan and whether there is any default in the repayment of such loan. Right, so that was clause 9 regarding the repayments of the loans or other borrowings. Then we came to clause 10, which was regarding the issue proceeds. Right, 10A and 10B. Right, whether money raised by IPO, FPO, including the debt instruments. What does it say? Whether it has been, yes, applied for the purpose for which it has been raised. If not, the details along with the delays or the defaults and the subsequent rectification, if any. And money raised by the preferential allotment or the private placement. One, whether it is in compliance with section 42 and section 62 of the Companies Act 2013 and whether the amount has been used for the purpose for which it has been raised. If not, the nature of the non-compliance and the amount involved. Right, so that was up to clause 10. Then we came to clause 11, which was regarding the fraud. In fraud, we had three parts over there, A, B, C. Whether any fraud on the company or any fraud by the company has been noticed or reported during the year. If yes, the nature and amount involved is to be indicated. Right, then whether any reporting of fraud has been done to the central government under section 143.12 in the form ADT 4. Right, then what does it say? Whether the auditor has considered the whistleblower complaints received by the company during the year. Right, auditor, has he taken into consideration the whistleblower complaints? That was clause 11. Then clause 12 was regarding the Nidhi company. Nidhi company, whether it is complied with the requirement of net own funds to deposits in the ratio of 1:20, at least 10% of its investments in the unencumbered term deposits, and whether there is any default in the repayment of deposits or the interest thereon. Right, that was clause 12. Then clause 13, whether the related parties, whether the transactions with the related parties, are they in compliance with section 177 and 188 of the Companies Act, and the details have been disclosed in the financial statements in accordance with the applicable accounting standards. Okay, then coming to clause 14, which was regarding the internal audit system. 14A, whether the company has an internal audit system which is commensurate with the size and nature of its business. And second, whether the reports of the internal auditor during the period under audit, have they been considered by the statutory auditors. That was clause 14 regarding the internal audit. Clause 15, Non-cash transactions, whether the company has entered into any non-cash transaction. Are they in compliance with the provisions of section 192 of the Companies Act 2013? Then clause 16 is regarding the registration with the RBI and the NBFCs. 16A, whether the company is required to be registered under section 45IA, then whether the registration has been obtained. Then whether the company has conducted any non-banking financial or any housing finance activities without holding a valid certificate of registration. Where the company is a registered CIC, whether it continues to fulfill the criteria, and where it is an unregistered or an exempted CIC, whether it continues to fulfill such criteria. And if there are a number of CICs which are a part of the group, indicate the total number of CICs which are part of the group. Are you remembering that? Yes. Then coming to clause 17, which was regarding the cash losses, whether the company has incurred the cash losses in the financial year and in the immediately preceding financial year. Then clause 18, resignation of statutory auditors, where any resignation, right, of the auditors has happened during the year. What does it say? Whether the auditors have taken into consideration the IOC. What is IOC? Issues, objections and concerns which have been raised by the outgoing auditors, right? So clause 811 NOC, and here clause 18 is regarding the IOC, issues, objections and concerns. Okay. Then clause 19, which is regarding the material uncertainty for the ability to meet the liabilities. What does it say? On the basis of the financial ratios, on the basis of the aging analysis and the expected date of realization of the financial assets and the payment of the financial liabilities, the other information accompanying the financial statements, the auditor's knowledge of the board of directors and the management plans, whether the auditor is of the opinion that as on the date of the audit report, no material uncertainty exists regarding the company's ability to meet its liabilities as and when they fall due within a period of 1 year from the balance sheet date. Right? Simple words, that means what? You're doing a 1 year liquidity check for the company. That next 1 year, whether they have enough money to discharge their liabilities. Okay. So we saw in case of Vodafone Idea, it said that there is a material uncertainty which exists. Whereas Reliance Industries, wherein it said there is no material uncertainty which exists. Okay. Right. Then after that, we came to the clause 20, which was regarding the CSR, the corporate social responsibility. 20A, 20B. 20A is relating to expenditure other than the ongoing project, whether it has been transferred to the CSR fund within 6 months of the expiration of the financial year, and related to ongoing project within 30 days from the end of the financial year, whether it has been transferred to a special account called as the unspent CSR account. Right. And 21, clause 21 is applicable for the audit report on the consolidated financial statements. What does it say? The companies which are included in the consolidation to which CARO is applicable indicate the details of those company and the paragraph numbers of CARO where there is a qualification or an adverse remark. Right. So did we yesterday see it in case of the Airtel, which is the company, whether it's parent company or subsidiary company, and which are the paragraph numbers of the CARO which are having the qualification or the adverse remarks. Okay. And then along with the chapter, we also covered some 40 questions over there. Right. So certainly a very important area, though it looks like there are 21 clauses in retail, we have seen that there are 47 clauses of reporting over there. Are you getting that? And again, you need to not only know the reporting requirement, that is part 1. You should know what is the reporting requirement of the clause. Part 2 is you should be knowing the audit procedures, and part 3 is you should be knowing the case study, the reporting, the conclusion, how the answer is required to be written. So I told you, you need to do this 3-dimensional study for the chapter of the CARO 2020. Okay. Right. So we've completed with 36 standards, then 34 clauses of ethics, then the 21 clauses of the CARO. And then we started with our next chapter, which is regarding the company accounts and the audit. Okay. Right. So just I have a pictorial presentation of the right? Caro 2020, right? So just very quickly we can go through that pictorial presentation. Anyways, I think by now we have learned the entire names and numbers of the clauses of Caro 2020 at least, right? So clause 1, which is regarding the property, plant, equipment and the intangible assets, right? Then clause 2, which is regarding the inventories and the working capital, okay, right? Then clause 3, which is regarding the loans, investments, guarantees and the security. Clause 4 is also what? It is regarding the loans, investments, guarantees and the security, right? Then clause 4, it is clause 4. Clause 5 is regarding the public deposits, right? Then clause 6 is regarding the cost records, right? Clause 6 is regarding the cost records, right? Then 7 is regarding the statutory dues, the disputed statutory dues and the undisputed statutory dues, right? The undisputed and the disputed. Then clause 8 is regarding the undisclosed income, right? 9 is regarding the repayment of the loans or the other borrowing, so repayment of the loans, right? Then 10 is regarding the issue proceeds, IPO, FPO, preferential allotment and the private placement, right? Then after that we have the clause 11, which is regarding the fraud, right? Which is regarding the fraud and also the whistleblower complaints over there, right? Then 12 is regarding the Nidhi company, right? Then 13 is regarding the related parties, right? 13 is regarding the related parties. 14 is regarding the internal audit, right? 14 internal audit. 15 is regarding the non-cash transactions, okay, right? 16 is regarding the registration with the RBI and the NBFCs, okay, right? Then 17 is regarding the cash losses, right? 17 is regarding the cash losses. 18 is regarding the resignation of the statutory auditors, right? Then 19 is regarding the material uncertainty regarding the ability to meet the liabilities. So it says uncertainty ahead, right? So material uncertainty regarding the ability to meet the liabilities. 20 is regarding the CSR, that is the corporate social responsibility, and 21 is regarding the consolidated financial statements, right? It is regarding the consolidated financial statements, okay, right? So anyways, because I had a chart, I thought might as well I show it to you in the class, right? So now coming to our chapter of the company accounts and the audit, wherein we now know that we need to discuss a few sections of the Companies Act, mainly starting from section 139 to section 148 of the Companies Act 2013, and we are going to discuss section 123, section 132, section 130, section 131, section 128, section 134, subsection 5, right? So few other sections also we are going to discuss, but in the line what sections we need to discuss is section 139 to section 148 of the Companies Act 2013. And then yesterday we started with section 141, which is regarding the qualifications and the disqualifications of the company auditor. Qualification: individual or a firm where majority of the partners are chartered accountant, and a firm includes an LLP, but only those partners of the LLP who are the chartered accountants. But more interesting than the qualifications are the disqualifications of the company auditor. What does it say? A person shall not be eligible, or person will be disqualified to be appointed as an auditor of the company when it is a body corporate other than an LLP, or an officer or employee of the company, or a person who is a partner or who is in the employment of an officer or employee of the company, or what does it say? Person, partner, relative holds any security of or interest in, or has given or is indebted or has provided any guarantee. However, relative can hold the security up to the face value of rupees 1 lakh in the company. If relative exceeds the limit, corrective action can be taken within 60 days. Limit of indebtedness up to rupees 5 lakh allowed, and guarantee up to rupees 1 lakh allowed. Right, it 141 3D is for the 5 companies. Then 141 3E, which is regarding person or a firm is having the business relationship with the 6 companies. However, two business relationships are allowed. One, rent commercial transactions for rendering the professional services, and second performing the commercial transactions as for the in the ordinary course of business at the arm's length price, and that too as a customer. Then 141(3)(f), relative is a director or is in the employment as a director or a key managerial personnel of the company, right? Then G, CA is in full-time employment elsewhere or is already holding the audits of 20 companies, excluding the one-person company, small company, dormant company, private companies having paid up share capital of less than 100 crore, provided there is no default in the filing of the financial statements and the annual return with the registrar, right? Then H, person convicted by a court for an offense involving fraud and a period of 10 years has not elapsed from the date of such conviction. And 141(3)(I), what does it say? A person or a firm directly or indirectly provides the services mentioned under section 144 to three companies. Which three companies are over here? Company, holding company, and the subsidiary company. Okay, right? So this is up to what we have already prepared our chart yesterday. Is it right? Right, this is the chart which we've already prepared yesterday, right? And then we also had a look at section 141(4). What was 141(4)? If any of the disqualification mentioned under 141(3) is attracted after his appointment, he shall vacate his office, and such vacation shall be deemed to be a casual vacancy in the office of the auditor. What does it say? The auditor shall vacate his office, and such vacation shall be deemed to be a casual vacancy in the office of the auditor, right? So now first let us come to section 144 before we come into the question bank of 141 and 144 further. Right. So what is section 144? Auditor not to render certain services. Right. Auditor not to render certain services. So does that mean that if I am a statutory auditor of the company, I cannot render any other services? No, I can render the other services which are permitted by the, which are approved by the audit committee or the board of directors, as the case may be. Why audit committee or the board of directors? Because every company is not required to constitute audit committee. So if the company is required to constitute audit committee, then audit committee. If no audit committee required to be constituted, then the board of directors. But what does it say? In this list of other services, the following services can never be provided by the auditor of the company, can never be provided by the statutory auditor of the company. What are those services? Accounting and bookkeeping, internal audit. Design and implementation of financial information system, outsourced financial services. Investment advisory services, investment banking services, actuarial services, management services, and any other kind of services as may be prescribed. So out of this 9, can they be provided even after they are approved by the audit committee or the board of directors? No. These 9 services can never be provided. But like say tax audit is not there in the list of those 9 services. So can that be provided by the statutory auditor of the company? Yes, but it has to be approved by the audit committee or the board of directors. But say statutory auditor of the company wants to provide investment advisory services. Can investment advisory services be provided by the statutory auditor of the company? No, even if it is approved by audit committee board, no, it cannot be provided only because it is in the blacklist. Okay, these services cannot be provided by the statutory auditor of the company to holding company and to the subsidiary company. Are you understanding section 144? Auditor not to render certain services, either directly or indirectly. So even through your management consultancy company, can you provide these services? No. So one, what does it say? Any other services to be rendered by a chartered accountant should be approved by the audit committee or the board of directors, but it should not include the following services. Which are the services which should not be included? Accounting and bookkeeping, internal audit, design and implementation of financial information system, outsourced financial services, investment advisory services, investment banking services, actuarial services, management services, and any other kind of services as may be prescribed. Are you getting that? Any other kind of service as may be prescribed. Right. Right. So yesterday in the textbook we've seen up to 141(3)(e), which is regarding the business relationship. Right. What is 141(3)(f)? Relative is a director or is in the employment as a director or a KMP. Or G is what? CA is in full-time employment elsewhere or already holding the audit of more than 20 companies. However, this 20 companies does not include the one person company, small company, dormant company, private company having paid up share capital of less than 100 crore, and provided that the exemption is available only if that company has not committed any default in filing the financial statements and the annual return to the registrar. 141(3)(h), person convicted by a court for an offence involving fraud and a period of 10 years. And 141(3)(i), a person who directly or indirectly renders any of the services referred to in section 144 to holding company or the subsidiary company. That is why we say, for the purpose of 141(3)(i), how many companies do we have over there? 3 companies, right? So 141(3)(d), 5 companies, 141(3)(e), 6 companies, and 141(3)(i), we have the 3 companies over there. And what does it say? Directly or indirectly should not be providing the 144 services. So what does it say? Either himself or through his relative or any other person connected or associated with such individual, or through any other entity whatsoever in which such individual has significant influence or control, or whose name or trademark or brand is used by such individual, shall be termed as rendering of services directly or indirectly by the auditor. Simply what they want to say, that through your affiliates, through your network, you remember affiliates and network? Right? Affiliate, we had discussed networking guidelines. And okay, through your alliance, through your affiliates, through your network also, can you be providing these services? No. Through your management consultancy services, can you be providing these services? No. It says neither directly nor indirectly, even for the individual and even for the firm. And then you have section 144, auditor not to render certain services. Other services to be rendered are to be approved by the audit committee or the board of directors, but it shall not include the following services, which is rendered directly or indirectly to company holding or the subsidiary company. And what are those services over there? Two services over there. What are the first two? Accounting, bookkeeping, and internal audit. Then design and implementation of the financial information system, outsourced financial services, investment advisory services, investment banking services, actuarial services, management services. And what does it say? Any other kind of service as may be prescribed. Right. And where a person appointed as an auditor of a company incurs any of the disqualification, after his appointment, he shall vacate his office, and such vacation shall be deemed to be a casual vacancy in the office of the auditor, right? So this is what we have already discussed regarding the section 141 and section 144. Have we completed with both these sections? Section 141 also and section 144 also. Are you all with me? Right. So now let's have a look at the question bank for the remaining questions for 141 and 144, right? So did we discuss 141 3D1 yesterday? Right, 141 3D1 is what? Hold security of or interest in. Right, then 3D2 is what? Indebtedness. And 3D3 is what? The guarantee. Okay. Mrs. A, wife of Mr. A, had given a financial guarantee for the principal amount of a debt owed by Mr. X to ABC for rupees 6 lakh. To, yes, Mr. X has repaid, right, 5 lakh to ABC, to ABC Limited, 2 days before the date of the appointment of Mr. A as an auditor of the company. So now the disqualification should not be attracted as on the date of appointment. Here is the disqualification attracted as on the date of appointment. No, what does it say? Before 2 days before the date of appointment, they have repaid the 5 lakh rupees. So then is the guarantee up to rupees 1 lakh? Yes. So in that case, are they disqualified? No, they are not disqualified in that case. Right. So 141 3D 3 of the Companies Act provides that a person is disqualified to be appointed as an auditor of a company if he or his relative or his partner, what did I tell you? PPR. What is PPR? Person, partner, relative has given any guarantee or provided security to any person for his indebtedness to the with the company. Again, to the company, holding company, subsidiary, associate, or a subsidiary of the holding companies. That is again talking about the 5 companies for an amount of the limit prescribed. Rule 10 prescribes the amount that it should not exceed rupees 1 lakh. Right. Any guarantee or provision of security for an annual amount exceeding 1 lakh will render a person to be disqualified. In the present case, at the type of appointment, the guarantee subsists only for the remaining 1 lakh, as 5 lakh out of 6 lakh has already been discharged. Therefore, no disqualification is attracted. Right. So what is important learning which we have over there, that the disqualification should not be attracted as on the date of appointment. So today I am holding 2 shares of Growth Limited. Today can I be appointed as an auditor of Growth Limited? No. Then today I sold those shares. Now tomorrow can I be appointed as an auditor of Growth Limited? Yes. Then day after I purchase the share, then again I will be 141(4) deemed to have vacated his office, as and such vacation shall be deemed to be a casual vacancy in the office of the auditor. Okay. Mr. Y, a practicing CA, has been appointed as an auditor of Z Limited on 12th of June for 2022. The following persons have done the following transaction in the securities of Z Limited. Daughter of Y purchases securities on 10th September 2021 of face value 45,000, market value 90,000. Do you need to consider the market value? No, you need to consider the face value. Is it within the limit? Right? Is it within the limit? When he was appointed as auditor? 12th of June. When did she purchase the security? 10th of September. Okay. Now, husband of the daughter of Mr. Y purchased securities on 10th of December 2021 of face value 90,000. So now I need to take the total of 45,000 and the 90,000. All the securities were sold on 10th of March 2022 for 3 lakh. Discuss the implications of the above on the appointment of Mr. Y. Right. So now what does it say when they have been sold? 10th of March. Okay. Now 10th of December. How much time is given for the relative to take the corrective actions? 60 days. Right. So 10th of December, then 10th of January, and then after that the 10th of February. Like say tentatively 10th of February. And here what does it say? The securities were sold on 10th of March. So was the corrective action taken within 60 days? No, it was not taken within the 60 days. That is why he will have to vacate his office as an auditor. He shall vacate his office. Are you able to follow this? Yes. So 141 3D1. Then the definition of relative includes daughter and the daughter's husband. Both are covered in the definition of the relative. The disqualification will be applicable if the relatives are holding securities of face value of more than 1 lakh. Market value is not important. It is also to be noted that in the event of acquiring any interest after the appointment, the corrective action has to be taken within 60 days. In the given case, what has happened? Corrective action has been taken by the husband of the daughter on 10th of March is also not in accordance with the prescribed grace period of 60 days. Therefore, Y will be disqualified for appointment as an auditor as per section 141 3D1, and he shall vacate his office. Are you able to follow, everyone? Yes. Question number 8. As an auditor, how would you deal with the following situation? Ram and Hanuman Associates, CAs in practice, have been appointed as the statutory auditors of Krishna Limited for 1314. Hanuman, a partner of the firm Ram and Hanuman Associates, holds 100 equity shares of Shiva Limited, a subsidiary company of Krishna Limited. No, what did we say? 5 companies, the person and partner cannot hold any share, right? So can they hold the shares of the subsidiary company of Krishna Limited? No. What does it say? He would be disqualified to be appointed as an auditor. Are you able to follow? Are you able to interpret the question? Are you having a quick analysis? Or you're like, no, ma'am, let me read it slowly 3 times, 4 times. You can't do that at CA final. And you need to have a quick capturing, like, photographic memory. You need to have a quick capturing. If you're not able to do, increase your attention, pay more attention in the class, right? Don't be lousy. Don't be like, oh, no, how come? Yes, don't be that much lost. Okay. Navy and KB Associates, a CA firm, has been appointed as the statutory auditor of Poor Limited for 1314. Savvy, the relative of Navy, a partner in Navy, KV and Associates, is indebted for 6 lakh to Wealthy Limited, a subsidiary company of Poor Limited. Comment. What is your comment? Out or not out? Out. Why? Because relative is exceeding indebtedness exceeding rupees 5 lakh to the subsidiary company, and subsidiary company is also included. So first what I need to write in my answer, 141 3D2 of the Companies Act, a person shall not be eligible for appointment as an auditor if he is indebted for an amount exceeding rupees 5 lakh. If any of the disqualification is attracted after appointment, he shall vacate his office as an auditor. In the present case, what does it say? Therefore, the firm Navy and KV would be disqualified to be appointed as an auditor, which is the holding company of Wealthy Limited, because Savvy, the relative of Navy, a partner in Navy KV, is indebted to Wealthy Limited for an amount exceeding the minimum approved limit. right, for an amount exceeding the minimum approved limit. Are you getting that, everyone? Right, question number 10. CA Adroit was indebted to Anfraxius Limited for a sum of 6 lakh on 1st of April 2015. However, CA Adroit, having come to know that he might be appointed as an auditor of the company, he squared up the amount on 10th of July. So 1st April he was indebted. On 10th July he squared up the indebtedness. Later on he was appointed as an auditor of the company for 2016 on 16th of July. Right. Subsequently, one of the shareholder complains that the appointment of CA Adroit as an auditor is invalid because he incurred the disqualification under Section 141 of the Companies Act. No, what did we say? The disqualification should not be attracted as on the date of the appointment. So one, you write down 141 3D2, then 141 4. However, where a person has liquidated his debt before the appointment date, there is no disqualification to be constituted for such appointment. In the given case, C. Adroit was indebted to Anfraxius. He was appointed as an auditor on 31st March, right? Held on the AGM held on 16 July. He also repaid the amount on 10th July. That is before the date of the appointment. Hence, the appointment of CA Adroit as an auditor is valid and the shareholders' complaint is not acceptable. Okay. Question number 11. Amar, a CA, bought a car financed at 7 lakh by Chaudhary Finance Limited, which is a holding company of Charan Limited and Das Limited. He has been the statutory auditor of Das Limited and continues to be even after taking the loan. Right. So again, is the indebtedness exceeding rupees 5 lakh? Right, for holding company also? Yes. So is he qualified to be appointed as an auditor? No. What does it say? He shall vacate his office and the company needs to appoint another auditor for the company. Are you understanding that? He shall vacate his office. Next one. PQ and Company is an audit firm with partners P and Q. For 1819, the firm has been appointed as statutory auditor of Mango Orchids Hotel Limited. The audit firm is a regular customer of the hotel. A customer means what? Business relationship. The exception under 141(3)(e) is a regular customer of the hotel and the partners usually stay in the same hotel at various locations in the course of traveling for their various professional assignments. Normally, payment for such stay are settled against the quarterly bills raised by the company. Give your comment with respect to the Companies Act. Right. So as a customer, it would be allowed, but only what care is to be taken that the amount should not exceed rupees 5 lakh. The only care which should be taken that whatever is the, because the bills are settled on a quarterly basis, but the outstanding balance of such bill should not exceed rupees 5 lakh. Why? Because though you will be saved under 141(3)(e), you will be caught under 141(3)(d. Because indebtedness will exceed rupees 5 lakh. Are you understanding? If the outstanding bill of the hotel is exceeding rupees 5 lakh. Yes, somebody had a question yesterday around this point. So I hope that point is clarified now. Okay, if as a customer, but then you have to take care of both the clauses, 141(3)(d also and 141(3)(e) also. Okay, right. So 141(3)(d)(2), which is regarding the indebtedness. Then you have 141(3)(e). What is 141(3)(e)? A person or a firm is having any business relationship. What does it say? But business relationship does not include commercial transaction which are in the ordinary course of business at the arm's length price. Right, where the person has liquidated his debt before the appointment, there is no disqualification to be constituted for such appointment in the given case. Okay, assuming the balance amount at any point of time during the year due to the hotel does not exceed the prescribed limit of 5 lakh. It's a PQ and Company is not disqualified to be appointed as a statutory auditor, right, as per 141(3)(d)(2). In the absence of the same, the auditor will be disqualified to act as an auditor and shall vacate his office. When will he have to vacate his office? If it exceeds 5 lakh rupees, right? If when he incurs his disqualification subsequent to the appointment. Since in terms of 141(3)(e), what is 141(3)(e)? Business relationship, right? What is 141(3)(e)? It is regarding the business relationship. What does it say? Since in terms of 141(3)(e), PQ and Company is not a person or a firm, whether directly or indirectly having any business relationship with the 6 companies as may be prescribed, the auditor shall not be disqualified to act as an auditor and shall shall not be required to vacate his office as an auditor. Why? Because why? It comes under the exception. What comes under the exception? As a customer. What are the two things which comes under the exception? One, providing the professional services, and second, as a customer. Will this be construed as business relationship? No, this will not be construed as the business relationship. Are you able to follow that? So one part in the answer they've given in the context of 141 3D2, and second part of the answer they've answered in the context of 141 3E. है ना, तो indebtedness, that is 141 3D 2, and then 141 3E, which is in the context of the business relationship. Everybody, are you able to follow? Okay, now coming to 141 3G. And what is 141 3G? Sealing on company audits. And sealing on the company audits, right? So PQRST and company as an audit firm. Sit straight, everyone. S is an audit firm having partners PQRST. Okay, now Mr. P, Mr. Q, Mr. R, Mr. S, Mr. T are holding the appointment as an auditor of 4, 5, 6, 10 and 15. Right, so what does it say? PQRST. And P, Q, R, S and T. And what does it say? 4, 5, 6, 10 and 15. 4, 5, 6, 10 and 15. Okay, what are the total number of audits which can be taken in the name of each partner? 20 audits. So what are the remaining number of audits? 16, right? 15, then here 14, 10 and 5, right? So total number of audits which can be taken in the name of the firm, right? 20, 30, 30 plus 40, right? 30 plus 30, 60 more audit assignments can be accepted in the name of the firm. Right now the firm is doing the audits of how many companies, right? 25, 30 and 10, so 40. So total how many audits can be accepted? 100, right? So how many audits are remaining in the name of the firm? 60 audits. How many audits are remaining in the name of the individual partners? These are the audits which are remaining in the name of the individual partners. Are you able to analyze on the basis of the first sentence in the question? Okay, provide the maximum number of audits remaining in the name of PQRST. Provide the maximum number of audits remaining in the name of the individual partners. Have we already done that? Yes, then can PQRST and company accept the appointment as an auditor of 80 private companies having paid up share capital of less than 100 crore, which has not committed default in filing of financial statements or the annual return with the registrar, 2 small companies and 1 dormant company? Yes, so now here you don't need to bring the council guidelines into picture. Only if I look at it from the context of the company law, can the CA accept these audits over there? Yes, he can accept the audit. But as a closing remark in my answer, I can also write down that the council guidelines has prescribed that the total number of audit assignments should not be exceeding the 20, including the small companies and the private companies also. So that I can write it as a closing remark. But the question is not asked from the context of the Chartered Accountants Act. The question has been asked from the context of the Companies Act. Are you able to follow this? Yes. Would your answer be different if out of these for 80 private company, 65 companies are having paid up share capital of 115 crore each? Yes, then our answer would be different. Then out of that 65, they had to accept any 60. Then out of that 65, they had to accept any 60. Are you all with me? Yes. So first in the given case, right, what is the exact situation? In aggregate, all the 5 partners are having the 40 audits and provisions and explanations. As per section 141(3)(g) of the Companies Act, a person shall not be eligible for appointment as an auditor of a company if he is in full-time employment elsewhere, or a person or a partner of a firm holding appointment as an auditor if such partner or person or partner at the date of appointment or reappointment is holding appointment as an auditor of more than 20 companies other than one person company, dormant company, small company, private companies less than 100 crore, provided it has not committed a default, right? So this is the theory which I need to write in the answer. Is it clear to everyone? Right, this is the theory which I need to write. Then as per section 141(3)(g), the limit of audits is 20 company audits per person. So the overall ceiling limit for the firm is 100 company audits. Sometimes a CA is a partner in a number of auditing firms. In such a case, all the firms in which he is a partner or proprietor will be together be entitled to 20 company audits in his account, right? So say Sparkle is an auditor in is a partner in 3 CA firms. And a Sparkle is a partner. CA Sparkle is a partner in three CA firms, right? Say SRS and Company, SPT and Company, and say some SAB and Company. So now all the three companies, all the three firms put together, how many company audits can be accepted in the name of CA Sparkle? 20 company audits. Now how to divide the audit amongst these three firms? It says it is their own affairs. It is their own decision whether they want that all 20 should be taken through the first, or 5 5 5 or 10, or whether it should be 5 10 5, or whether it should be 1 1 18, whatever. That has to be mutually decided amongst the firm. But the limit is not per firm. The limit is per partner. The limit is not per firm. The limit is per partner. I am assuming that all of you are able to follow what I am talking about. Am I right? Is my assumption good, or is it hypothetical? No, it's not hypothetical. Okay, right. So all the firms in which he is a partner or proprietor will together be entitled to 20 company audits on his account. Okay, right. So what does it say? They can do the audit of more 60 companies. Then what are the individual number of audits which can be taken in name of each of the partner? Then what does it say? PQRST can hold the appointment as the auditor of the 80 companies, 2 small company and the 1 dormant company, which are excluded from the ceiling limit. Then as per the facts of the case, if they are already having 40 company audits, they can only accept the 60 more audits. So now what does it say? If paid up share capital of 65 companies is 115 crore each, then what does it say? They can accept the appointment as auditor of 2 small company, 1 dormant company, 15 private companies having paid up share capital of less than 100 crore, and the 60 private companies having paid up share capital of 115 crore each, in addition to the above 40 company audits already hit. Right, so that is one big answer for question, yes, for the clause 141.3G. What is 141.3G? Right, what is 141.3G? Ceiling on the number of the audit. So that is question number 13. Similar lines, we have question number 14. ABC, a firm of CA comprising 3 partners. ABC is the auditor of 50 companies. 50 companies means how many? As per the details given below, 10 small companies, private companies having paid up share capital of less than 100 crore 20, private companies having paid up share capital of more than 100 crore 15, and public companies 5. So actually they are doing the audit of only 20 companies. Why? Because these first 30 are not to be counted. Are you able to understand? Right, so total audits is how much? 60. So how many more audits they can accept? 40. Right, A signs the balance sheet of 10 small companies and 10 private companies having paid up share capital of less than 100 crore. How many more balance sheet A can sign? I really was looking for an opportunity to check your attention. I got that opportunity. How many more balance sheets they can sign? Seriously? The 5 and 10, get up, stand up, do 5, 10 push-ups. No, do 5, 10 sitting like that, crossing your ear and like that. Array, A signs the balance sheet of 10 companies, not to be counted. 10 private companies having paid up share capital of less than 100 crore, not to be counted. So how many more balance sheet he can sign? 20. Full limit is available of 10. Full of A. Full limit is available of A. Are you understanding that? Okay. B signs the balance sheet of 10 private companies having paid up share capital of less than 100 crore, and 5 private companies having paid up share capital of more than 100 crore. So how many more he can sign? 15. And C signs the balance sheet of 10 private companies having paid up share capital of more than 100 crore, and 5 public companies. So 10 plus 5 already, right? So more 5, right? So 20, 15 and 5. So total is 40, which is remaining. Are you understanding? What is the maximum number of audits that the firm can accept as a whole? 40. And what is the maximum number of audits each individual partner can accept? So 20, 15 and the 5. Are you getting that? Right? 20, 15 and 5. If you understand the question later point of time, then what happens, the punishment is 6 months. You have to understand the question the moment it has been put in front of you. You understand? No, when the food is served in front of you, when it is hot, that time only you should be eating the food. If you eat it after some times, it loses the taste also. It is not tasty also. It becomes cold also. So now, later on, looking at the suggested, you are able to do a PhD on the answer. Arey, what is the use? You say, ma'am, no, you went too fast. Whatever it is. No justification. Explanations, no. Are you going to write a letter to institute giving explanation? Okay, this is what happened. This is what happened. Day of the exam, I had fever. You don't know. Day of the exam, something happened in the family. Day of the exam, while going to the exam center, there was a puncture of my vehicle. Institute says, like, what do I do about it? You understand? No, what do I do? Let it be the adverse or the worst of the circumstances over there. Right? Where does a lotus bloom? It lotus blooms only when there is the muddy water. If there is plain water, the lotus will never bloom over there. So the more the muddy water, the more the lotus will bloom out. Okay, right. Anyways, let's come to question number 15. XKSY and Company Chartered Accountants is an audit firm having two partners, K and Y. KSY is already holding the audit of 36 public company. Areva, they made life simple over there. And a 36 public company. So how many audits are remaining? Only 4 audits. Now, KSY needs your advice in the following situation. KSY has been offered an appointment as an auditor of 7 more private companies. Of the 7, one of this company is having a paid up share capital of 150 crore. 5 are small companies as per the act and one is a dormant company. Can they accept all these 7 audits over there? Yes, they can accept all these 7 audits. And would your answer be different if out of these 7 private companies, 3 companies are having paid up capital of the 90 crores? Still our answer would be the same. Right, still the answer would be the same. Now little dose I gave you, so that is why you're giving good answers now. Okay, right, coming to question number 16. Right, XYZ and Company is an audit firm having partners XYZ, and what are the audits that they are doing right now? 5, 5 and 10 audits. Provide the maximum number of audits which are remaining in the name of XYZ. 40, because right now they are doing the audits of the 20 companies. Then what are the audits remaining in the name of the individual partners? 15, 15 and 10. That is again the breakup for the 40. Then yes, can XYZ and Company accept the appointment as an auditor in 60 private companies having paid up share capital of less than 100 crore, 2 small companies and 2 dormant companies? Yes. Would your answer be different if out of these 60 private companies, only 15 companies are having paid up share capital of less than 100 crore? That means 45 are having the paid up share capital of more than 100 crore. Then out of the 45, you had to select any 40. Why? Because your limit remaining is 40, right? Discuss with reference to the ceiling on the number of audits as per the Companies Act 2013. Are you understanding that? Yes. Then after that, question number 17. Contravene Limited appointed CA Innocent as an auditor of the company for the current financial year. Further, the company offered him the services of actuarial, investment advisory, investment banking, which was also approved by the board of directors. What to do? Out. Why out? He is the auditor of the company, and to the company only he is providing the actuarial, investment advisory and the investment banking services. What does it say? You cannot provide the 144 services to company, holding company and the subsidiary company. So first you write down section 144, auditor not to render certain services. Then you write down 141(3)(I), disqualifies a person if he is providing any of the right consulting specialized services. In the given case, right, the auditor is advised not to accept the services as these services are specifically notified in the services not to be rendered by him as an auditor as per section 144. Okay, next one, question number 18. Renault and Company CA appointed as a statutory auditor of R Limited for 13-14. The company is also in need of some actuarial services. Consequently, the board of directors of the company offered the same to Sona and Company, an associate to Renault and Company, which has been duly accepted by the firm. Comment. Right? Qualified or disqualified? Qualified or disqualified? Whose associate it is? It is the associate of the... Is it the associate of R Limited or is it the associate of the CA? It is the associate of the CA. So what do we say? Directly or indirectly, not to render the services. That is why what does it say? He shall vacate his office as an auditor. Looking at associate, you immediately think only 3 companies: company, holding company and subsidiary company. But it is not the associate of R Limited. It is the associate of Renault and Company. I drew the arrow also. Okay, Sona and Company and Renault and Company. It is the associate of Renault and Company. Are you understanding that? And what does 141(3)(I) say? Directly or indirectly, not to render these services. Are you able to follow this? Okay, right. Yes, so that completes our questions regarding the qualifications and the disqualifications of the company auditor. Now we will come to the questions regarding the appointment of the company auditor. So yesterday we saw some 60 plus questions are there, but out of that 18, so we've already completed with 1 and 2 sections only, 141 and 144. And 141 and 144. Are you all with me? Everybody, are you all there? Right. So what we have completed discussing is section 139, section 141 and section 144. Now we shall come to the discussion of section 139, which is regarding the appointment of the company auditor, right? Coming to section 139, which is regarding the appointment of the company auditor, right? Section 139, which is regarding the appointment of the company auditor. Okay, and now section 139, which is regarding the appointment of the company auditor. Keep writing, take a fresh page, draw a wonderful chart with me. Okay, leave space, don't write anything micro, then I write anything further, you don't have any place to write in your book. And so be little spacious when you are doing the writing with me. Okay, right. So now the appointment of the company auditor, we are going to be discussing it under 2 heads, and we are going to discuss it under the 3 heads. What are the 2 heads and 3 heads? Appointment of the company auditor in case of the other than government company, and the appointment of the company auditor in case of the government company. So other than government company and in case of the government company. And then we are going to discuss 3 heads. What are the 3 heads? The appointment of the subsequent auditor, the appointment of the first auditor, and the appointment of the auditor in case of the casual vacancy, right? The appointment of the subsequent auditor, the appointment of the first auditor, and the appointment of the auditor in case of the casual vacancy, right? For other than government company, first auditor, casual vacancy, there I will write down board of directors and members. And for government company, I will write C and AG. Who is C and AG? Comptroller and Auditor General of India, the Board of Directors and the members, right? The Board of Directors and the members. Okay, so does everybody understand the format of the chart which I have drawn over there, right? Other than government company, right? Other than government company and the government company. Yes, the other than the government company and the government company, then the appointment of the subsequent auditor, first auditor, and the casual vacancy, and then we say BOD members, CNAG, BOD, and the members. Is it clear to everyone the format which we have drawn over here? Right? Is it clear to everyone? The appointment of the first auditor and the appointment of the auditor in case of the casual vacancy, right? The appointment of the auditor in case of the casual vacancy, right? Clear to everyone? Yes. Okay. What are the 3 types of appointment of auditor which we need to discuss? Appointment of the subsequent auditor, that is what is the routine course for appointment of the auditor, what is the procedure for the appointment of the first auditor, and what is the procedure for the appointment of the auditor in case of the casual vacancy. Is it clear to everyone? Right. So you don't need to copy, write it again, but I am writing it again over here, right? You don't need to write it, right? First auditor and the casual vacancy. What did we say? BOD members. Is it right? And then what did we say? C and AG, BOD and members, right? Board of directors and the members. And this was other than government company, and this is for the government company. Is it clear to everyone? Okay. Now, the first power to appoint the first auditor for a other than government company has been given to the board of directors. They can appoint the first auditor within 30 days from the date of the registration of the company. However, if the board fails to appoint the first auditor within 30 days from the date of registration of the company, he can be appointed by the members at the 90 days with the EGM, right? At the extraordinary general meeting. It doesn't say next 90 days. So that means effective, it means 60 days. Effective 30 days, first 30 days given to the board of directors, and if not appointed by the board within 30 days, what does it say? Within 90 days he should be appointed by the members at the EGM. It doesn't say next 90 days. That means it effectively means the 60 days. So first 30 days given to the board. If board does not appoint within 30 days, then member to appoint within the 60 days. Are you getting that? Okay, right. Then government company, first power to appoint the first auditor has been given to the CNAG. They can appoint the first auditor within 60 days from the date of registration of the government company. However, if CNAG fails to appoint, then the board of directors can appoint within the next 30 days. So here they are using the word next 30 days. And if the board fails to appoint within the next 30 days, then the members can appoint within the next 60 days. Then the members can appoint within the next 60 days. Are you understanding that? Yes, so what does it mean? Say government company constituted today. From today within 60 days, who can appoint the auditor? CNAG. If CNAG fails to appoint next 30 days, who can appoint the auditor? The board of directors. And if the board fails to appoint, then who can appoint within the next 60 days? The members can appoint the auditor. This is first auditor for the government company. Are you able to follow this? First auditor for government company. And other than government company, if company is constituted today, from today within 30 days can be appointed by the board of directors. However, if board of directors fail to appoint, then what does it say? Within 90 days, right, to be appointed by the members. So 90 days means effectively it is 60 days. But don't write that 60 days because it's nowhere given over there. It just says within 90 days at the AGM. But out of that, 30 days are already cut. So effective what is remaining is only the Yes, effective what is remaining is only the 60 days. Are you able to follow this, everyone? The power of the next person is received only when the earlier person does not exercise his power. So within 60 days, can board of directors appoint the first auditor? No. Only first power has been given to the CNAG. If they fail, so you wait for 60 days for CNAG to appoint. If CNAG does not appoint within the 60 days, then the board can appoint within the next 30 days. Then see, if CNAG does not appoint, can directly the members appoint? No. Next, first power is given to the board of directors that you can appoint within the 30 days. And if board also fails to appoint within 30 days, then the members can appoint within the 60 days. And what if members also don't appoint within 60 days? Then it is contravention of section 139. Then it is contravention of the provisions of the Companies Act 2013. Are you able to follow this, everyone? Okay. Now, casual vacancy. Yes, casual vacancy all of a sudden. Right, there was a person who was sitting in the chair of the auditor, and all of a sudden that seat has become vacant. And there is a casual vacancy, like say auditor died and or auditor disqualified. God knows what happened to him. Today morning he came to office and purchased one equity share. Purchase one equity share. What does it say? Any of the disqualification attracted after appointment, he shall vacate his office, and such vacation shall be deemed to be a casual vacancy in the office of the auditor. Or what, auditor resigned. So all of a sudden, there is a vacancy in the office of the auditor. So one, there could be vacancy in the office of the auditor due to resignation, or there could be vacancy in the office of the auditor other than resignation. Are you understanding that? Right, the vacancy, all of a sudden there is a vacancy in the office of the auditor. This vacancy could be due to other than resignation, or it could be due to resignation. I am talking about OGC. What is OGC? Other than government company. What does it say? Other than resignation, the vacancy is to be filled in by the board of directors within 30 days from the date of the casual vacancy. Within 30 days from the date of casual vacancy, it is to be filled by the board of directors. Okay. However, if the casual vacancy is due to resignation, again what does it say? It shall be filled by the board of directors within 30 days from the date of the casual vacancy. However, it also should be approved by the members at the EGM within 3 months of the date of recommendation of the board. Right, it should also be approved by the members. Why? Because now there is a resignation. Should the shareholders intervene? Yes, they should look into, okay, what have been the reasons that the auditor of the company has resigned. So other than resignation, to be filled by the board, due to resignation, to be filled by board. But when will it be effective? Only when it has been approved by the members within 3 months of the recommendation of the board, right? Within 3 months of the recommendation of the board. This is casual vacancy for other than government company, wherein they distinguish between the other than resignation and the resignation, right? So what does it say? Casual vacancy to be filled in by the board of directors within 30 days from the date of the casual vacancy. However, if the casual vacancy is due to the resignation, however, if the casual vacancy is due to the resignation, it shall also be approved by the members at the EGM within 3 months of the date of recommendation of the board, and within 3 months from the date of its recommendation of the board, right? And government company, there is no distinction between resignation and other than resignation. There, what does it say? All casual vacancies are to be filled in by the CNAG within 30 days from the date of the casual vacancy. However, if CNAG fails to fill the casual vacancy within 30 days, then the board can fill the casual vacancy within the next 30 days. However, if the board does not fill within the next 30 days, there is no power given to the members over there. There is no power which has been given to the members over there. Are you able to follow? Little? Yes, we'll repeat it 1 or 2 times again and again for it to get better imprinted into your mind. Yes, clear to everyone? Are you able to follow? First auditor and the casual vacancy auditor. First auditor and the casual vacancy auditor for other than government company and in case of the government company. Both the situations over there. Okay, right. So I will draw the chart once again, and no need for you to draw. What am I talking about? First auditor and the casual vacancy auditor. OGC and GC, other than government company and the government company. What does it say? Other than government company, board of directors and the members. And in case of government company, C and AG, board of directors and the members. Is it right? Is this format okay for everyone? Okay. And now what we need to do, we will remember a number over here. What is that number? 396363. Right, 396363. Look over here. Don't write anything. 39636. And then casual vacancy is all 33 only. And then what do we do? 30, 90, 60, 30, 60, 33, 30, 30. Right, 30, 90, 60, 30, 60. So rather, 39636 is for the first auditor and casual vacancy is everywhere 3 only. Casual vacancy everywhere is what? 3 only, and first auditor is what? 39636. But this number will work only if you draw the format which I have drawn. You understand? No. If you first write government company, then you write other than government company. If you write first casual vacancy and then you write the first auditor and then you say 396363, nothing will happen for you in life. You understand? So then you have to draw the format which I have drawn. Only then the number will be the correct number, or you will say the number which you have dialed is invalid. You understand? No. Right? So 30, 90, 60, 30, 60, 33, 30, 30 dash. Because it does not give the power to the members to appoint in case of casual vacancy for the government company. That is why we say dash. Are you getting that? 30, 90, 60, 30, 60, 33, 30, 30 dash. Casual vacancy so damn easy to remember. It's everywhere 30 days only. You understand now? Only where it is due to resignation, it has to be approved by the members within 3 months. But in case of first auditor, 30, 90, and then 60, 30, 60. And 30, 90, 60, 30, 60. Are you getting that over there? Okay, right. So now let me come to my main chart. Okay, right. So in the main chart, what I will do over here, I'll write down 396363. Are you getting that? 396363. Okay. And then what do I write? 30, 90, 60, 30, 60, 33. And then 30, 30, and then dash. What does it say? The first power to appoint the first auditor has been given to the board of directors. They can appoint the first auditor within 30 days from the date of registration of the company. However, if the first auditor does not appoint within 30 days, then the members can appoint within 90 days at the EGM. Right. Government company first auditor can be appointed by the CNAG within 60 days from the date of the registration of the company. If CNAG fails to appoint within 30 days, then the board can appoint within the next 30 days. And if the board fails to appoint within the 30 days, then the members can appoint within the next 60 days. Is it clear to everyone? Yes, all casual vacancies are to be filled in by the board of directors just within 30 days from the date of the casual vacancy. However, if the casual vacancy is due to the resignation, it also has to be approved by the members at the EGM within 3 months of the recommendation of the board, within 3 months of the recommendation of the board. And casual vacancy, government company, is to be filled by the CNAG within 30 days from the date of the casual vacancy. However, if CNAG fails to fill the casual vacancy within the 30 days, then it is to be filled by the board of directors within the next 30 days. Okay. And what is the tenure of appointment of these auditors? It says the first auditor, he will hold office till the conclusion of the first AGM. The first auditor, he will hold office till the conclusion of the first AGM. And the casual vacancy auditor, he will hold office till the conclusion of the next AGM. Casual vacancy auditor, he will hold office till the conclusion of the next AGM. Right? So that completes our discussion regarding the the appointment of the first auditor and the appointment of the auditor in case of the casual vacancy. Are you all with me? Right, so 30, 90, 60, 30, 60, 30, 3, and then 30, 30. Are you able to follow that? 396363. At 396363. Okay, right. In case of a government company, subsequent auditor can be appointed by the, has to be appointed by the CNAG within 180 days from the commencement of the financial year. Right, within 180 days from the commencement of the financial year, and the auditor so appointed shall hold office till the conclusion of the general meeting, conclusion of the AGM. Okay, right. So in case of government company, subsequently who will appoint the auditor? It says the CNAG will appoint the auditor within 180 days from the commencement of the financial year, and the auditor so appointed will hold office till the conclusion of the AGM. Okay, and subsequent auditor other than government company, it says before the auditor is appointed, a written consent certificate is to be obtained from the auditor. A written consent, a written certificate is to be obtained from the auditor. Okay, none of the disqualifications are attracted, that the appointment is within the limit and so. And then after that, the auditor will be appointed by the members who will hold office from the conclusion of the first AGM till the conclusion of the, from the conclusion of the first AGM till the conclusion of the sixth AGM, and thereafter till the conclusion of every sixth AGM. And then within 15 days of the appointment of the auditor, right, the company, they will inform the auditor, and the company, they will also inform the ROC, filing form ADT 1. Right, the company will inform the auditor, and the company will also inform the ROC, filing form ADT 1. Right, so if I have a look at this one chart completes my entire discussion regarding the appointment of the company auditor. Are you able to follow this? Right, so government company who appoints the subsequent auditor? CNAG, right? Other than government company who appoints the subsequent auditor? The members. Ordinary resolution in the general meeting. But before the appointment, the written consent certificate of the auditor is required to be obtained. And within 15 days of the appointment of the auditor, what does it say? The company needs to inform the auditor regarding his appointment, and the company needs to file the form ADT1 with the ROC. Are you able to follow this, everyone? Right. And government company, CNAG, to appoint the subsequent auditor within 180 days from the commencement of the financial year. Clear to everyone? Yes, are you all with me? Able to see the consolidated view regarding the appointment of the company auditor? Yes, anybody, any question? Any doubt, any question? If you are asking your friend, maybe I can answer it also. Yes, anyone? Okay. Now, let us look into one question or a situation over there. Right, Bharat Heavy Electronics Limited and ONGC, are these government companies? Right, are these government companies? Yes, say these are the government company. Now say there is a company, right? Now say there is a company called as, say, example, Tail Limited. Example, just some name I have to give over there. And in Tail Limited, right, what BHEL is holding the 30% paid up share capital and ONGC is holding the 30% paid up share capital. Okay, before that, what is the definition of a government company? What is the definition of a government company? It says not less than 51% of the paid up share capital. Not less than 51% of the paid up share capital is held by the central government or the state government, or partly by the central or the state government, or which is a subsidiary of a government company. That is the definition of the government company, in which, what does it say? Not less than 51% of the paid up share capital is held by the central government or the state government, or partly by central and the state government, or which is a subsidiary of a government company. Okay, so is BHEL a government company? Yes. Is ONGC a government company? Yes. My question is TAIL a government company? Proof? 30% is of BHEL and ONGC is 30%. For it to be a subsidiary, 50% should be of one company. So here in both the, you can't add 30 plus 30 and say 60 and say that it's a subsidiary company. Are you able to follow this? Is it a subsidiary company? Say there is another company, Nail Limited. I'm just making some names. And say there is another company, Nail Limited. In Nail Limited, BHEL is holding 30%. Right? BHEL is holding 30% and central government is holding 30%. Is Nail a government company? How you are saying it's a government company? Don't you know the definition of the government company? Central government is holding 30%. Government company is holding 30%. Are you under? You are just doing 30 plus 30. Busy. 60, 51, exceeding. So government company. Are you understanding? Are BHEL and ONGC government companies? Yes. But is TAIL and NAIL a government company? But you were saying, yes, it is a government company. Why? Because it was very difficult for your heart to say that it is not a government company. So, okay, so we keep the words of your heart and we call them as the deemed government companies. So, are Nail and Tail government companies? No, but they are the deemed government companies. Will you apply the provision of the appointment of the auditors to these deemed government companies also? Yes, you will apply it to the deemed government companies also. Why? Because if you look at this particular sentence over here, it says in case of a government company. So with government company only if you have to say, then there is no need to write anything else. What is the definition of government company? In which not less than 51% of the paid up share capital is held by central government, state government, partly by central or state government, or which is a subsidiary of a government company. Now what does it say? In case of a government company or any other company owned or controlled directly or indirectly by central government or by any state government or governments, or partly by central government, partly by one or more state government. So this pink part over here is nothing but regarding the deemed government companies, right? So these provisions are applicable not only to the government companies, but they are also applicable to the deemed government companies. See, if they had to say government company, they would have said, in case of a government company, the CNAG will appoint. You understand? No, but have they done like that? No, they say in case of a government company or any other company owned or controlled directly or indirectly by CGSG or partly by CGSG, the CNAG shall in respect of a financial year appoint an auditor duly qualified to be appointed as an auditor under this act within a period of 180 days from the commencement of the financial year, who shall hold office till the conclusion of the AGM. Are you understanding? So these provisions regarding the appointment of the auditor, will you apply them only to the government company? No, you will also apply them to the deemed government companies also. Are you understanding what is deemed government company? Directly or indirectly. In my example, nail and tail, are they government company? No, they are the deemed government companies. Are you able to follow this, everyone? Okay, right. And then in other than government company, what does it say? The auditor shall be appointed by the members who shall hold office from the conclusion of the first AGM till the conclusion of the sixth AGM, and thereafter till the conclusion of every sixth AGM. So here we are talking about section 139 subsection 2, which is regarding the rotation of the company auditor. So here now we are talking about section 139 subsection 2, which is regarding the rotation of the company auditor. Right. So first, for 139 subsection 2, we need to study the applicability. What is the applicability? It says, now see, whenever a list of applicability is being prepared, who goes and stands first in the line whenever a list is being prepared? Listed companies. They are very happy. You know, they're smart ones. They say, okay, anything applicable, first we will go and stand in the line. Right. So listed companies. And then what does it say? Apart from listed companies, the unlisted public companies having the paid up share capital of more than or equal to 10 crore, or all the private companies having the paid up share capital of more than or equal to 50 crore, or all companies having the, yes, borrowings or deposits, right? All companies having the borrowings or deposits of more than or equal to 50 crore cannot appoint an individual for more than one term of 5 consecutive years, cannot appoint an individual for more than one term of 5 consecutive years, and cannot appoint a firm for more than 2 terms of 5 consecutive years. Cannot appoint a firm for more than 2 terms of the 5 consecutive years. Are you getting that? Right. So in case of the listed companies, unlisted public companies having paid up share capital of X more than or equal to 10 crore. All private companies having paid up share capital of more than or equal to 50 crore. All companies having borrowings or deposits of more than or equal to 50 crore cannot appoint an individual for more than one term or a firm for more than 2 terms. In any case, after you finished your 1 term or 2 terms, what does it say? There is a cooling period of the 5 years. And again, what does it say? Common partner, the network, even that firm and network needs to follow the cooling period, right? So common partner, even they need to follow the cooling period? Yes, even they need to follow the cooling period. Are you able to follow this? Okay. A private limited, right? A private limited having paid up share capital of 30 crore and having deposits with the bank of 60 crore, right, have appointed as firm as an auditor for 11 years. Is the appointment valid? Have appointed a firm as an auditor for 11 years. Is the appointment valid? No, it is not valid. Why? Because our rotation provisions applicable to A private limited? Yes, though the paid up share capital is less than 50 crore, the borrowings and deposits are exceeding the 50 crore. It is 60 crore. So they can appoint a firm for not more than 2 terms of 5 consecutive years. Are you able to follow this, everyone? Right, the lot of questions coming in the exam. So one we saw, no, lot of questions coming in the exam where 141.3G. What was 141.3G? Ceiling on the number of audits. Then lot of questions coming in the exam for 141 3D1 and 3D2. What is 3D1? It is regarding the security or interest. What was 3D2? It was regarding the indebtedness. It was regarding the indebtedness. And what is 141 3G? It is regarding the ceiling. And now I am telling you, third area where question comes in the exam is regarding the rotation of the company auditor. Are you all with me? Right, the rotation of the company auditor. Clear to everyone? Where questions, you know, we saw 18 questions already, right? So where these questions are coming, 118 questions we saw from 141 3D 1 and 2, 141 3D 3G, and also 144, and an auditor not to render certain services and all. And then 139 2, which is regarding the rotation of the company auditor, right? Rotation of the company auditor, right? So say A limited is a listed entity. entity. So are rotation provisions applicable? A Limited is a listed entity. So are rotation provisions applicable? Yes. Can they appoint an individual as their auditor? Yes. Now individual they cannot appoint for more than 5 years. Okay. So now say in 2025 they appointed P as their auditor. Then in 2026 also P was their auditor. In 2027 say they change their auditor to Q. I'm just creating an example. Right. In 2028 they again appointed P to do the audit. In 2029 again P did the audit. In 2030 again they appointed Q to do the audit. In 2031 also they told Q that you only do the audit. In 2032 they told P you do the audit again. 2033 whether P can be appointed as an auditor. That is my question. Individual is being appointed. So individual cannot be appointed for more than one term of 5 consecutive years. And this is what P has been doing the audit in 25, 26, 28, 29 and 32. So my question is whether 23, whether P can be appointed as an auditor. In 23, whether P can be appointed as an auditor. Yes. Can P be appointed as an auditor for 23? No, he cannot be appointed as an auditor. Okay, why he cannot be appointed as an auditor? Why he cannot be appointed as an auditor? Because it says consecutive years shall mean all the preceding years. Consecutive years shall mean all the preceding years until the break is by 5 years or more. Until the break is by 5 years or more. Okay, right. So now P did the audit in 2025. Will I count this as the first year? Yes. 26. He did the audit for the second time. Will I count it as the second year? Yes. 27. Is there a break of 5 years? No, I will continue with the consecutive counting. Then again 30, 31. Is there a break of 5 years? No, I will continue with the consecutive counting. And then after this, now P cannot do the audit for more 5 years. And did you notice in this process Q can also do the audit only for more 2 years. So now they will have to identify some R auditor only. Are you understanding? Otherwise, just imagine the situation of a CA firm, like a firm is appointed, right? Say for 9 years, okay, say for 9 years, PwC did the audit. Then you say for 1 year, KPMG will do the audit. And then again 9 years, PwC can do the audit. No, then how many years PwC can do the audit? Only for 1 more year. Why? Because consecutive years shall mean all the preceding years until the break is by 5 years or more. If you don't apply this interpretation, you will make it 9191 instead of it being 105 105. Right now, what is the provision? 10 years if one firm has done the audit, then next 5 years that firm cannot do the audit. Then again 10 years one firm can do the audit, then again 5 years that firm cannot do the audit. You understand? No, if you say no, 10 years are not over, 9 years are only over, 1 year you appoint somebody else, then again 9 years you'll appoint. So 10-5 you will convert it to 9-1 in that case. Are you understanding? So what does the definition of consecutive years say? That consecutive years shall mean all the preceding years until the break is by 5 years or more. Okay. So if an individual is appointed, then what does it say? Individual appointed for 5 years, then he cannot be appointed for audit for next 5 years. Again appointed for 5 years, again cannot be appointed for next 5 years. And firm appointed for 10 years cannot be appointed for next 5 years. Again firm appointed for 10 years, again cannot be appointed for the next 5 years. Are you able to follow this, everyone? Yes. 5 years should be? No, that is what example I gave you. Even though if it is not continuous, will it be counted as continuous? It will be counted as continuous. If it is continuous, nothing like it. Had it been a simple example, 25, 26, 27, 28, 29, P did the audit for all the 5 years. Wonderful. Now 30, 31, 32, 33, 34, P cannot do the audit. Some another firm. Then again for 5 years, can P do the audit? Yeah. So if it is that ideal situation, yes, but this is how you could, what do you say, find a outway of the law and a way of not following the law. So that is why they've given the definition of the consecutive years. That consecutive years shall mean all the preceding years until the break is by 5 years or more. So until the break is not of 5 years, you will continue with the consecutive counting. Are you able to understand it now? Okay, right. So over here we are talking about the, yes. We cannot do the audit for 5 years. No, that break is not to be counted. Your consecutive year counting will only get over only after you've completed the 5 year. And after 5 year, you now cannot do the audit for the next 5 years. You understand? You cannot say that if they've already taken a break of 3 years, so only 2 more break is required. No, 5-year break is to be taken. Yes. 1 minute, please keep quiet. No, then you take a break of 5 years, now. No, then see, 5-year break. No. So if you are assuming 2029, then you take a break of 5 year. So 30, 31, 32, 33, 34. You take a break of 5 year. And then 35, can you be appointed? Yes. That is allowed. See, after I do the audit for 25, 26, and I take a break of 5 years. I do the audit for 2025 and I do the audit for 2026. I do the audit for 2 years. And then 27, 28, 29, 30, 31. These 5 years I don't do the audit. Q is doing the audit. Now can I do the audit for 5 years? Yes. Break has to be of 5 years or more. Till the time the break is not of 5 years, you will continue with the consecutive counting. If you still have a question, you can come and ask me later. Okay, but this is what is the provision. Okay, right. So now coming over here to the rotation. What are we discussing, everybody? Please pay attention. The appointment of the company auditor, and which we are discussing also regarding the rotation of the company auditor, right? So what does it say? Subsequent auditor who will appoint, array don't talk re, right? Subsequent auditor who will appoint in case of non-government company. Every company will appoint the first, at the first AGM, an individual or firm as an auditor who shall hold office from the conclusion of that meeting till the conclusion of the 6th meeting, and thereafter till the conclusion of every 6th meeting. So subsequent auditor for other than government company is appointed by the members. And before the appointment is made, what does it say? A written consent certificate is to be obtained from the auditor. And after the auditor is appointed, the company will inform the auditor and the company will file the form ADT1 with the ROC. Right, this I have already discussed with you. Okay, before the appointment of the auditor, the company has to obtain the written consent certificate from the auditor, and after the appointment of the auditor, the company needs to inform the auditor, and within 15 days the company also needs to file the form ADT1 with the ROC. Okay, other than a government company, we've already discussed government company, deemed government company, 180 days. Right, 180 days, right, to be appointed by the C and AG. Right, rotation, we'll come to that. Right, then after that we have the appointment of the first auditor. For first auditor, what did we say? 30, 90, 60, 30 and the 60. Right, for government, other than government company, 30, 90. And for government company, we said 60, 30 and the 60. Do you remember that? 3, 9, 6, 3, 6. Right, 39636. An appointment in case of casual vacancy, 33 and 30, 30. 33 and the 30, 30. Are you all with me? Right, pay attention. Don't lose the momentum of the class. Right, 33 and the 30, 30. Okay. And now let us discuss these 2 points, which is regarding the rotation of the company auditor and also regarding the provisions relating to the audit committee. Okay. Right. So one, what we study is the applicability of 139.2. So to which companies it is applicable? Listed company. And apart from listed company, 10 crore, 50 crore and the 50 crore. And what does it say? They cannot appoint an auditor auditor from individual for more than one term or a firm for 2 terms of 5 consecutive years. A firm for 2 terms of 5 consecutive years. And after they have completed their term, what does it say? Not eligible for 5 years, not eligible for 5 years. So cooling period is the same for the individual as well as for the firm also. Individual can do audit for 5 years, then next 5 year it cannot do the audit. Firm can do the audit for 10 years, then next 5 year it cannot do the audit. Did I write down 5, 5, 5, 5 and 10, 5, 10, 5? Did I write down 5, 5, 5, 5 and 10, 5, 10, 5? That what does that mean? Ke cooling period is the same for the individual as well as for the firm. Are you understanding that, everyone? Right. Then audit firm, no audit firm having a common partner can be appointed. Right, common partner, can that firm also be appointed? No, rather we said network firm also cannot be appointed. Right, so Sparkle, he is an auditor on 3 companies. No, we said, right, that he is a partner in 3 companies. Right, what did we say? Example, Sparkle is a partner in 3 companies. Now, 3 firms. Okay, one of the firm has done the audit of Growth Limited for 10 years. Right, so can the other firms also do the audit of Growth Limited for next 5 years? No. The other firms, they also cannot do the audit of Growth Limited, assuming that Growth Limited is a listed company. Say SRS and company has done the audit of Growth Limited for 10 years. Now next 5 years, can SRS do the audit of Growth Limited? No. Can SPT do the audit of Growth Limited? No. Can SAB do the audit of Growth Limited for next 5 years? No. And if they are a part of any network, can the entire network do the audit for the next 5 years? No, the entire network also cannot do the audit for the next 5 years. Are you able to follow this? Common partner, what does it say to the other audit firm whose tenure has expired in a company immediately preceding? What does it say? No audit firm having a common partner shall be appointed. Okay, now say, and a Sparkle has done the audit, but the common partner between these firms is Joy. But the common partner between these firms is Joy. Still, can these firms be appointed? No, still these firms cannot be appointed. So you said Sparkle did the audit for 10 years, but now the common partner where Sparkle is the partner, Joy is also the partner in other firms. What does it say? Any partner of the firm. If he is a partner in the other firms also cannot be appointed as an auditor for a period of 5 years. Okay, right. Now it says you cannot be appointed. Yes, you can appoint a firm as an auditor maximum for 5 years. Maximum you can appoint a firm for 10 years. Individual maximum, how much time you can appoint the same individual for? 5 years. Maximum a firm can do your audit of your company for how many years? 10 years. But can you remove the auditor before 5 years or 10 years, or is it you cannot remove them also? No. Can they be removed before the 10 year? Yes. It is provided that the right of the company to remove an auditor is not prejudiced. The auditor can be removed. Then what does it say? Again, the provisions are applicable to the network also. Right? Then the break in the term has to be a continuous period of 5 years. I already told you that sentence. Consecutive years shall mean all the preceding years until the break is by 5 years or more. So break has to be of the 5 years. Okay. Then if a partner who is in charge, okay, this is again an interesting situation. And okay, say PwC was doing the audit of Growth Limited. Growth Limited is a listed company. And Growth Limited is a listed company and PwC is doing the audit of Growth Limited. Okay, now PwC, their 10 years are over, and out of 10 years, 7 years, who did the audit? CA Sparkle. Right, in PwC, who did the audit? CA Sparkle. Why 7 years? Because SQC won. And an engagement partner has to be rotated after 7 years. And 3 years, say some CA Joy of PwC, he did the audit. But majorly, who did the audit of Growth Limited? CA Sparkle. He did the audit for 7 years. Now 10 years are over. Now the audit is going to say KPMG. What Sparkle says, I am also joining KPMG as a partner. If you join KPMG as a partner, even KPMG cannot do the audit for next 5 years. If he says, no, no, wherever my Right, providing expressly that he shall not be reappointed. Are you getting that, everyone? Okay, so reappointment of the retiring auditor, right? The reappointment of the retiring auditor, right? Then after that, one more provision which we have over there is the provisions relating to the audit committee, right? So now coming to one more question, and then we'll come to one more provision, and then we will come to the question bank. Provisions relating to the audit committee, right? The provisions relating to the audit committee, right? The provisions relating to the audit committee. Okay, so now one, let us discuss over here, right? No need for you to talk, right? Which companies are required to constitute an audit committee? First, we study the applicability of section 177. So whenever an applicability list is being prepared, who is going to be first in the line? Listed companies. And apart from listed companies, what does it say? Every public company having the paid up share capital of more than or equal to 10 crore, or having the turnover of more than or equal to 100 crore, or having in the aggregate the LBDD. What is LBDD? The loans, borrowing, debentures and deposits, right? The loans, borrowings, the debentures and the deposits, right? Loans, borrowing, debentures and the deposits of more than or equal to 50 crore is required to constitute an audit committee of the board of directors, is required to constitute an audit committee of the board of directors, right? Is required to constitute an, no, it is at the end of the previous year. If previous year, if these limits have been exceeded, then this year you need to constitute an audit committee at any point of time. Right, paid up share capital is at the end of the year, turnover is anyways during the year, and LBDD is at any. Yeah, previous. Then this year you need to constitute an audit committee. If previous year the limits have been exceeded, then this year you need to constitute an audit committee. Are you understanding that? Okay. Right. So what does it say? These are the classes of companies which are required to constitute an audit committee. These are the classes of the companies which are required to constitute an audit committee. Which companies are required to constitute an audit committee? Listed companies, and then every public company, paid up share capital of more than or equal to 10 crore, turnover of more than or equal to 100 crore, or the LBDD of more than or equal to 50 crore. What we will do, anyways, we are studying so much of company law today, we will prepare a consolidated chart of the applicability. Right, so the first applicability we studied was of section 139(2), which was regarding the rotation of the company auditor. Are you all with me? Right. What was the provision for the rotation of the company auditor? Listed companies, always applicable. Unlisted public companies having paid up share capital of more than or equal to 10 crore. Then what does it say? All companies having paid up share, the private companies having the paid up share capital of more than or equal to 50 crore, or all companies having the borrowings or deposits of more than or equal to 50 crore need to follow the rotation provisions, right? Then we also have the applicability of section 177, which is regarding the constitution of the audit committee, right? So which companies are required to constitute audit committee? Again, listed companies. Apart from listed companies, what does it say? Every public company having the paid up share capital of more than or equal to 10 crore, or having the turnover of more than or equal to 100 crore, or having in the aggregate the LBDD, loans, borrowing, debenture, deposits of more than or equal to 50 crore is required to constitute an audit committee of the board of directors. Are you understanding? We are just trying to consolidate all the applicabilities that we are going to be seeing, right? All the applicabilities that we are going to be seeing. Okay. Yes. Everyone? Okay. Now, so there is a possibility that a company may be required to constitute an audit committee, or it may not be required to constitute an audit committee. Are you understanding? There are two possibilities. No. Is every company required to constitute an audit committee of the board of directors? No. We just studied the applicability of section 177. Okay. So now we need to cover two possibilities, right? Whether the company is required to constitute an audit committee of the board of directors, or it is not required to constitute an audit committee. What is AC? Audit committee. Are you all with me? Right, the audit committee. Okay. Now, if it is not required to constitute an audit committee, then who will do the recommendation for the appointment of the auditor? Right, the recommendation of the auditor. Okay, who should be appointed as an auditor of the company? The recommendation will be done by the board of directors to the shareholders, and then the shareholders will appoint the auditor of the company. Simple. Are you understanding that? If the company is not required to constitute an audit committee. However, where the company is required to constitute an audit committee, what does it say? Now the audit committee will make the recommendation to the board of directors regarding the appointment of the auditor. The audit committee will make the recommendation to the board of directors regarding the appointment of the auditor. They will make the recommendation to the board of directors. Okay. Now, the board of directors, they may agree or they may disagree with the recommendation which has been made by the audit committee. The board might agree or the board might disagree with the recommendation which has been done by the audit committee. Are you understanding that? Right. If the board agrees with the recommendation which has been given by the audit committee, they will pass on that recommendation to the shareholders, and then the shareholders will appoint the auditor of the company. Is it clear to everyone? Okay. However, if the board disagrees with the recommendation of the audit committee, it will cite back the matter to the audit committee. No, it will refer back the matter to the audit committee to reconsider its recommendation of the auditor. It will refer back the case to the audit committee to reconsider its original recommendation. One possibility, audit committee says, okay, we reconsider our original recommendation, we will change. And after the change, say it is accepted to the board of director, then that name will be recommended and the auditor will be appointed. But what is the other possibility? That the audit committee says we will not change our original recommendation. What do they say? We will not change our original recommendation. Are they ready to change their, originally they recommended CS Sparkle. Board of directors said no CS Sparkle, but again they set it back. But what audit committee said? No, CS Sparkle only. Right, so now what does it say? It is not ready to reconsider its original recommendation. What will the board of directors do? They will document the reasons, citing the reasons for the disagreement. And a board of directors will document citing the reasons for the disagreement with the recommendations of the board. And now the board will send their own recommendation to the audit committee, to the shareholders. Now they will send their own recommendation to the shareholders for the appointment of the auditor. Okay. So ultimate power is with whom? Board of directors. No, for recommendation. Appointment is shareholder. But for recommendation, it says audit committee, you give your recommendation. We don't like your recommendation, we will get back to you. Still you don't change your recommendation, then we will cite the reasons why we are not liking your recommendation. And the board will give its own recommendation to the shareholders for the appointment of the auditor. Are you understanding this, everyone? Provisions relating to the audit committee. So, it is formality's sake that the power for the appointment of the auditor has been given to the members, and not the members, the shareholders, but actually who gives the recommendation for the appointment of the auditor? The audit committee or the board of directors. Okay, first power given to the audit committee. If not audit committee, then the board of directors. Are you understanding that, everyone? Okay, now when the audit committee is recommending the name of someone as an auditor of the company, when the audit committee or the board of directors, are you understanding, as the case may be? Because every company does not need to constitute an audit committee. So if the audit committee or the board of directors, when they have to recommend the name of an individual or a firm as an auditor, what are they going to look into? They are going to look into the qualifications and experience of the auditor. Then they are going to check whether these qualifications and experience, are they commensurate with the size and requirements of the company? Whether these qualifications and experience, like they have done the audit of, say your Growth Limited is a software company. So what you will check, whether CS Sparkle, has he done the audit of the software company, right? Say Growth Limited is a software company. So now audit committee board, when they have to give the recommendation for the auditor, what they will check, whether CS Sparkle has done the audit of a software company. Then after that, what he will check, okay, whether the qualification and experience is commensurate with the size and requirements of the company. Say CS Sparkle has done the audit of a software company, but that software company revenue 10 crore. Now this software company Growth Limited having a turnover of 100 crore. So what does it say? Though he has the qualification and experience, it is not commensurate. It is not matching with the size and requirements of the company. He's done an audit of a small software company. He may not have the experience for doing the audit of a big software company. Are you able to follow this? And the audit committee board of directors, they will also look into any proceedings or orders which have been passed against the auditor, any list of pending proceedings or any orders which have been passed against the auditor before recommending the name of the auditor. So before you recommend somebody as an auditor, who is going to recommend? Audit committee board of directors. What are they going to look into? They are going to look into the qualification and experience, and whether that qualification and experience, is it commensurate? Like yesterday in clause 14A of CARO, whether the company has an internal audit system which is commensurate with the size and nature of its business, and a matching with the size and nature of its business. And then what does it say? The list of any pending proceedings or the orders against the auditor, right? Even that is required to be looked into before, while recommending the name of an auditor. Okay, right. So what does it say? All appointments. This is a wonderful sentence, and they ask it in the MCQ over there. Right? Casual vacancy auditor is to be appointed. Should audit committee recommend? Yes. All appointments, including the filling of the casual vacancy of an auditor under this section, shall be made after considering the recommendations of the audit committee. Right? So casual vacancy, who can appoint the auditor other than government company? Casual vacancy, who can appoint the auditor for other than government company? Board of directors within 30 days from the date of the casual vacancy. But even in that case, will the audit committee give the recommendation? Yes. For all appointments, first auditor, subsequent auditor, all auditors, government company, other than government company, all. When will it be? When the company needs to constitute an audit committee. If they don't need to constitute an audit committee, the question only does not arise. Then the power goes to the board of directors. Okay, in case of a company that is required to constitute an audit committee, and in cases where a company is not required to constitute a committee, then the board. So what does it say? Or AC or the BOD, as the case may be, shall take into consideration. What they will take into consideration? The qualification and experience. Then whether the qualification and experience, is it commensurate with the size and requirement? Also they will look into any orders or any pending proceedings relating to professional matters of conduct against the proposed auditor. Then the audit committee or the board, what they will do? They will call for such other information about the proposed auditor. Then where the company is required to constitute an audit committee, the committee will recommend the name of an individual to the board, and the board will recommend the name to the members in the AGM. So committee will recommend to board, board will recommend to shareholders, and shareholders will appoint the auditor. Are you understanding that? Okay, if the board agrees with the recommendation of the audit committee, it will pass on the recommendation to the members. However, if the board disagrees with the recommendation of the audit committee, it shall refer back the recommendation to the committee for reconsideration, citing reasons for the disagreement. If after considering the reasons given by the board, the audit committee decides not to reconsider its original recommendation, so if they change their recommendation, wonderful. But if they say, no, we still recommend CS Sparkle only, now what will the board do? The board shall record the reason for its disagreement with the committee, and it will send its own recommendation for consideration to the members in the AGM. And obviously, if the board agrees with the recommendation of the audit committee, it shall place the matter for consideration by the members at the AGM. That is understood. Right. The auditor appointed in the AGM shall hold office from the conclusion of that meeting till the sixth meeting, whereas the first, yes, wherein such appointment has been made will be counted as the first meeting. So that we already know regarding the rotation. But do you understand these points regarding the provisions relating to the audit committee, everyone? Right. So one, the rotation of the company auditor, then the provisions relating to the audit committee, the reappointment of the retiring auditor, and then we've also studied this wonderful chart over here regarding the appointment of the company auditor. Right. So one, what we studied regarding the qualifications and the disqualifications of the company auditor. So what we can do over here, we can write down question number 1 to 18. Am I right? Yes, it is regarding section 141 and section 144. Right, 141 and 144, which is regarding the qualifications and the disqualification and auditor not to render certain services. And now we are talking regarding the questions for the appointment of the company auditor, which starts with question number 19. Are you all with me? Yes, question number 19. Now we are discussing regarding the audit committee regarding the appointment of the auditor. Ram Limited is a private company. Have we all come to page number 19? Yes, question number 19. Have you all come to question number 19? Okay. Ram Limited is a private company. Its balance sheet shows a paid up share capital of 55 crore and public deposits of 100 crore. Are rotation provisions applicable to Ram Limited? Ram Limited is a private company. Balance sheet shows paid up share capital of 55 crore and public deposits of 100 crore. Are rotation provisions applicable to Ram Limited? Yes. The company appointed CA Sham and Company. Yes, appointed Sham and Company, a CA firm, as the statutory auditor in its AGM held at the end of September 2017 for 11 years. You are required to state the provisions relating to the rotation of the auditor, the cooling off period as per the section 139(2) in case of an individual firm or an audit firm, both, and comment upon the facts of the case provided with respect to the aforesaid provisions. Right. So here you first need to write down the provisions regarding the applicability of section 139. Then you also need to write down regarding the rotation, 1 term and 2 term, and then you also need to mention about the cooling period, and you can also mention about the common partner. Right. Then in the given case, what has happened? Now, the provisions relating to the rotation of the auditor will be applicable as public deposits exceed the 50 crore and also the paid up share capital is exceeding the 50 crore. Okay. Therefore, Ram Limited appointed Sham and Company as an auditor for not more than 1 term of 5 consecutive years twice. And that means 2 terms of 5 consecutive years. Sham and Company shall hold office from the conclusion of this meeting till the conclusion of the 6th meeting 2022, and thereafter can be reappointed as an auditor for 1 more term of 5 years, that is up to 27. As a result, the appointment of Sham and Company made by Ram Limited for 11 years is void. So void means the existing auditor shall continue to be the auditor of the company, right? The existing auditor shall continue to be the auditor of the company. Are you all with me? Yes, everyone. Where are you? Yes, what are we discussing? Question regarding the rotations. Okay, right. ABC and Company is an audit firm having partner A, B, and C, whose tenure as statutory auditor in R Limited, a listed entity, has expired as per the Companies Act. XY is another C audit firm which is appointed as the auditor of R Limited for the subsequent year. So ABC tenure over. That is why now who appointed? XY appointed. Mr. A joins XY as partner 3 months after it was appointed as the statutory auditor of R Limited. Right, so after 3 months he joined. My God, people are also so cunning, no? You understand? ABC did the audit for 10 years. Right, their term is over. Now XY is appointed as an auditor. What he did, once let them be appointed, and then after 3 months he joined them as an partner, or he joined that particular audit firm. So now, as on the date of appointment of XY, was there a common partner? Yes, as on the date of appointment, was there a common partner? No. If the partner was appointed at a later point of time, he became a partner at a later point of time. After 3 months, he became a partner, right? So if I look at it technically, what does it say? XY may continue as the auditor. Why? Because as on the date of appointment, that there should not be a common partner in the firm as on the date of the appointment. So what does it say? XY may continue as an auditor, but does your conscience permit you to do so? Right? What does your conscience permit? So then again, what you do today, you appoint, tomorrow I'll join you as a partner. By 3 months also, no? Then in that case, what does it say? Though as per the Companies Act, there should not be a common partner on the date of appointment, but to maintain the integrity and independence, it is important to apply this auditor rotation rule for the whole term. Therefore, if there are common partners in the previous firm and newly appointed audit firm, the purpose of the law for auditors rotation will be defeated. What an amazing sentence. And the purpose of law for the auditor's rotation will be defeated. In view of the above provisions, after the date of appointment of the new firm, the old partner joins the new audit firm, it would defeat the objective and the intention of the lawmakers. Therefore, XY should vacate the office as an auditor. So, right, we will go more with the second view because that makes more sense. Right, this is how it has been given in the suggested of ICAI only. Okay, right. Now coming to question number 21. CA Rock is a partner in Ajay and Associates and Vijay and Associates simultaneously. That means CA Rock is a common partner. Ajay and Associates has completed its tenure of 10 years as an auditor in Sanjay Limited immediately preceding the current year. It may be noted that the provisions for applicability of rotation are applicable to Sanjay Limited. Now the company wants to appoint Vijay and Associates as an auditor. Whether Vijay and Associates is allowed to accept the appointment as an auditor? No. Why? Because it is a common partner, shall not be eligible for reappointment as an auditor. And would your answer be different from above if CA Rock, being in charge of Ajay and Associates and certifying authority of financial statements of Sanjay, retires from the partnership in Ajay and joins Vijay and Associates? No. Still, what do we say? Even in that case, he cannot be appointed as an auditor. He says, I will retire from this firm and wherever my audit is going, I'll go and join that firm. What did we say? No, that other firm will also be disqualified. Okay, right? What does it say? Vijay and Associates will also be disqualified as an auditor for next 5 years as newly joined partner CA Rock has retired from Ajay immediately preceding the current year, whose term in Sanjay has expired. Okay, coming to question number 22. Right. AB and company were appointed as an auditor for Nome Limited, a listed company, for 2 terms of 5 consecutive years. Right. So 1, 2, 3, 4, 5, and then 6, 7, 8, 9, and 10. So 2 terms of 5 consecutive years. Management of Known Limited reached out based on the recommendation of the audit committee to BCD and Company. So who has done the audit? AB and Company. Now they are recommending whom? BCD and Company for their nomination as the appointment as the auditor for 2021. However, BCD and Company did not provide any written consent to such appointment. Neither did they provide the certificate that the appointment will be in accordance with the conditions laid in the act and rules therein. What did I tell you? Okay, before the appointment of the auditor, the written consent certificate is required to be obtained from the auditor. Still, the management went ahead and proposed an appointment in the AGM, and BCD and Company were appointed as an auditor for 2021. Post-appointment, TCWD identified that majority of the partners in BCD are same which were there in AB and Company. Oh my God, common partners. Right now, fearing the contravention of the provisions of the Companies Act, management on the guidance of TCWG decided to file a complaint with the tribunal under section 145 of the Companies Act against the statutory auditor. Okay, the statutory auditors of the company have done a fraud, that is why remove the auditor. So that is what is the, they have done a mistake, but they want to put it now on the auditor. So they say auditor has done a fraud. You are required to guide BCD and Company regarding the contravention of the provisions of the Act and with respect to the appointment of the auditor. Okay. So appointment of subsequent auditor in case of the non-government company. Yes, what does it say? Before the appointment, the written consent and the certificate is required to be taken. Right. Then rotation of the auditor, right? The rotation provision in the current case has already served the 2 terms of the 5 consecutive years. Okay. In the current case, while appointing the auditors of the company, a written consent of the auditor to such appointment was not obtained. Moreover, a certificate which was required was also not obtained. Further, majority of the partners are already doing the, already were the partners in the other company. Hence, BCD and Company were not eligible to be appointed as an auditor of Nome Limited, as all the partners of BCD and the company are partners who've already served the 2 terms of 5 consecutive years. And since before the appointment, the management should have obtained the certification and written consent from BCD and company. Therefore, in this case also, what does it say? The management and the auditors have contravened the provisions of the Companies Act. As a result, fine as per section 147 will be applicable. So who has contravened the provisions of the Companies Act? The management also and the auditor also. So later on we will study section 147, which is regarding the punishment for non-compliance, the contravention by the company auditor, right? The contravention by the company auditor. Are you getting that? Okay. Next question. Under which circumstances the retiring statutory auditor of a company cannot be reappointed? Did I discuss this with you? He is disqualified for appointment, or he expressed his unwillingness, or a special resolution has been passed to appoint somebody else, or expressly providing that he shall not be reappointed. Okay. Subject to the provisions of sub rule 1 of rule 3 of the company accounts and audit rule, where audit and audit rule, where a company is required to constitute the audit committee, the committee shall recommend the name of an individual or a firm as auditor to the board for consideration, and in other cases the board shall consider and recommend that individual or a firm as an auditor to the members in the AGM for the appointment. Explain the manner and procedure of selection and appointment of the auditor. So what you have to write down, the provisions relating to the audit committee. An audit committee, qualification experience, is it commensurate with the size and requirement? Are you getting that? List of pending orders and proceeding. Then the board agrees, the board disagrees with the recommendation of audit committee. That full story. Then NIC Limited is a subsidiary of Ajanta Limited. Ajanta Limited, whose 20% shares are held by the central government, 25% are held by the Uttar Pradesh government, and 10% are held by the Madhya Pradesh government. So 20 plus 25, 45, 45 plus 10, 55, 55. So is Ajanta a government company? Yes. And is NIC Limited a subsidiary of a government company? Yes. So subsidiary of a government company is also a government company. NIC Limited appointed Mr. Prem as the statutory auditor. Arey, how NIC Limited can appoint the auditor? Who needs to appoint the auditor? The CNAG. Right? What does it say? The auditor can be appointed only by the CNAG. Consequently, the appointment of Prem is invalid and he should not give the acceptance to the directors of NIC Limited. Are you getting that? Right? Question number 26. RO Limited is registered with ROC on 1st of May 2014. The company's 27% of the paid up share capital is held by the central government, 28% by the state government, and the remaining 45% by the public. So obviously it's a government company. When was it registered? 1st of May. So now first auditor is to be appointed by the CNAG within 60 days from the date of registration of the government company. Why? Because it's a government company, na 30, 90, 60, 30, 60. Okay. The board of directors appointed RMG CAs as statutory auditor for 14-15 by passing a resolution at the board meeting on 25th of May. Comment whether the appointment is valid. What does it say? The appointment is not valid, as the first auditor of a government company is to be appointed by the CNAG of India. If CNAG fails to make such appointment within 60 days, then the board can appoint within the next 30 days. Are you all with me? Yes. Question number 20. 7. KM Private Limited, engaged in the manufacturing business of the silk shirt, is newly incorporated company dated 1st of September. On 28th of September, the members of KM Private Limited themselves appointed CA Raj, a renowned practitioner, as the first auditor of the company, opposing that board is not authorized to appoint the auditor. You are required to comment. No, the first power to appoint the first auditor of a other than government company has been given to the board of directors. They can appoint within 30 days. However, if the board fails to appoint, then the members can appoint at the EGM within the total 90 days. Okay. Therefore, the appointment of Raj by the members of the company is not in order. Okay. Right. Question number 28. Malta Private Limited, a newly incorporated company dated 1st of July 2017, is engaged in the manufacturing business of the cotton shirts. On 30th of July 2017, the managing director of Malta himself appointed Rajnath, his daughter's husband, as the first auditor of the company. Can the managing director appoint the first auditor? No, it is the board of directors. That means a board resolution is required to be passed. last, right? So state the provisions relating to appointment of first auditor and comment on the action of the managing director. Okay, so appointment of the first auditor in case of other than government company. And here there are two questions. First question is regarding the appointment of the first auditor, and the second question is regarding the relationship. What does it say? The daughter's husband, he appointed as an auditor. As per the facts of the case, Rajnath was appointed as an auditor by the MD, yes, which is in violation of section 139(6), which authorizes the board of directors to appoint the first auditor within 30 days from the date of registration of the company. Therefore, the appointment of Rajnath is not valid. And under these circumstances, the second issue relating to the relationship of the auditor with the MD becomes redundant. Right, so it says that relationship becomes the redundant over there. Okay, right. Now, while auditing Y Limited, CM Max, the statutory auditor of Y Limited, encounters exceptional circumstances that bring into question his ability to continue performing the audit. Anybody? Where had we said this sentence? While auditing Y Limited, Max, the statutory auditor of Y Limited, encountered the exceptional circumstances that bring into question the auditor's ability to continue performing the audit. SA 240, backup. And wherein we said if as a result of fraud or suspected fraud, the auditor encounters exceptional circumstances that bring into question the auditor's ability to continue performing the audit. Considering it appropriate, CA Max resigned from the office of the auditor. Due to the resignation of the auditor, the board of directors of Y itself appointed CA Mini, a practicing CA, as the statutory auditor till the conclusion of the sixth meeting. No, right, only till the conclusion of the next AGM, and that too because it is due to resignation. It shall be filled by the board, but it is also to be approved by the members at the AGM within 3 months. You are required to state the provisions relating to filling of the casual vacancy and comment upon the validity of the appointment. What does it say? If the appointment is approved by the company, CM Mini cannot hold the office till the conclusion of the sixth meeting. Appointment cannot be made for 5 years. The appointment will only be till the conclusion of the next AGM. Are you understanding that? Right. So question number 19 to 29. Right. Question number 19 to 29. Right. Question number 19 to 29 is regarding the appointment of the company auditor. Right, 19 to 29 is regarding the appointment of the company auditor. Is it clear to everyone? Yes. And now we come to the next heading over there, which is regarding the removal of the company auditor. So what did we study? Who can be appointed, who cannot be appointed, qualification, disqualification, then how that person who can be appointed would be appointed. Do you remember our beautiful chart over here? Other than government company, subsequent auditor, first auditor, and the casual vacancy auditor. And then after that also, now what we are studying regarding is the section 140, which is regarding the removal of the company auditor, right? It is regarding the removal of the company auditor, right? So now, removal of the company auditor, we need to discuss under the four heads. What are the four heads? One, removal of the company auditor by the members before the expiry of his term. That is what you say right now. At this moment, I want to remove the auditor of the company before the expiry of his term. Right. Second, you want to remove him at the expiry of his term, but before completion of his tenure. At expiry of term, but before completion of the tenure. What is the tenure? 5 years or 10 years, you know, na, rotation, 5 years or 10 years. So you say, no, I cannot tolerate this auditor for 5 years or 10 years. I want to change this auditor after 2 years or after 3 years only. Right. Second one, auditor says, what, you are removing me, I am only going. And the resignation by the company auditor. So company auditor himself resigns. And the fourth situation is regarding the removal of the auditor by the tribunal or CG, right? The removal of the auditor by the tribunal, that is the right? Try court and or by the CG. Okay, so removal of the company auditor, we need to discuss under 4 heads. What are the 4 heads which we have over there? Removal of the auditor by the members before the expiry of his term, and by the members before the expiry of his term. That is what you say, no, 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 I cannot tolerate this auditor till the AGM also. Right now, I want to remove the auditor of the company immediately, and I want to remove this auditor of the company. Second, you say at the AGM we'll remove him, and his term is not over, he's just finished 3 years, but after 3 years only we'll remove him, no need to keep him for 10 years. Are you understanding? If it's a firm can do audit for how many years? 10 years. But you say this fellow not doing good audit, remove him after 3 years only. So after, at the expiry of his term, but before completion of his tenure. Third one is the auditor says, I am only going, resignation of the company auditor. And fourth one, who is intervening now? Right, the central government or the tribunal is intervening, looking into the removal of the company auditor. Okay, so you say right now I want to remove the auditor of the company. Right now nothing happens. What happens? First it says, what is the trigger point? How can it say, okay, right now I want to remove the auditors of the company? It says a board resolution is required to be passed for the removal of the auditor before the expiry of his term. Then, within 30 days of the passing of the board resolution, an application is to be made to the central government in form ADT 2. So, company needs to make an application to CG in form ADT 2 regarding why they want to remove the auditor before the expiry of his term. Right. Then, after that, what does it say? The prior approval of the CG will be received. Yes, the prior approval of the central government will be received. And once the approval of the central government has been received, then it says within 60 days, a special resolution is to be passed in the general meeting for the removal of the auditor before the expiry of his term. And obviously, before the auditor is being removed, will a reasonable opportunity of being heard be given to the retiring or auditor being removed? Yes, a reasonable opportunity of being heard will be given to the auditor before being removed. So even though if you say right now also takes 3-4 months. You say, no ma'am, I can't wait till the AGM. Right now I want to remove this auditor. So first, how does it start with? Board resolution, and a board resolution is to be passed. Then within 30 days of the board resolution, the application is to be made to CG. Then there is no time limit when CG will give you the approval. Once the CG gives you the prior approval, okay, remove this person as an auditor of the company, then the special resolution has to be passed at the general meeting within 60 days. And when the resolution is being passed, will a reasonable opportunity of being heard being given to the auditor being removed? Yes. So do you see? You say immediately. It says what so much problem you are having with the auditor. Okay, right now you want to remove the auditor of the company. Central government says let us look into it. So prior approval of the central government is required. If I want to remove the auditor at the expiry of his term, prior approval of CG is not required. But in situation 1, what does it say? What is so much? And okay, you want to remove the auditor. What is so much of the problem between the company and the auditor that you want to remove the auditor immediately? Are you understanding that? Right. So for removal of auditor before expiry of his term, what are the 2 requirements over there? Prior approval of the CG, board resolution and all, that is the formality. That is the requirement of law. Prior approval of CG and SR in GM. What is SR? Special resolution in the general meeting. Right, prior approval of the central government and the special resolution in the general meeting. Right, so that is situation number 1, before the expiry of his term. What are the 2 requirements? Special resolution and previous approval of the CG. Right, so the application to CG has to be made in form ADT 2 along with the prescribed fees. The application has to be made within 30 days of the resolution passed by the board. That is why what I wrote, first board resolution, then within 30 days you make the application application to the CG. Then the company will hold the general meeting within 60 days of the receipt of the approval of the CG for passing the special resolution. So once CG approval is received, then within 60 days, the special resolution is to be passed. And before taking any action, what does it say? Auditor concerned shall be given a reasonable opportunity of being heard. Right? So same thing, but I've just put it in the correct sequence or a flow chart over here. Is it right? Right? How does it, what is the trigger point? Board resolution. Then within 30 days, make application to CG. Then you get the approval of the CG. Then within 60 days, the special resolution in the general meeting. And before taking any action, the reasonable opportunity of being heard is to be given to the auditor being removed before the expiry of his term. Is it clear to everyone? Right, let's take a break and then we shall continue.